everyone, guys, Edward here, back with another video. Thank you so much for being here again. In this episode now, I'm going to discuss about high quality POI versus low quality POI. Alright, have to understand that in the structure, sometimes we're going to see certain things. For example, let's say something like this, have a movement like this, right? You can mark this as a POI, right? But this is actually a weak, okay? It's a weak POI. All right, why is this actually a very weak POI? Because there's no liquidity, okay? You always want to see liquidity form, all right? Something, for example, like this. Let's say the market is doing this move, right? You have this aggressive. Let's actually do it this way before the break happens. Something like that. All right? So you're gonna be marking up this as your POI, right? Maybe this one, you know, other traders will be marking this one up as a POI. But you see that this is a weak POI. The weak POI would be this one, right? Because the liquidity is actually sitting above, all right? In this particular scenario, the liquidity is actually right here, all right? If you haven't seen my previous videos about liquidity, recommend you just go check it on the top right here on the corner. I do have an actual playlist where I show you the entire videos and specifically talking about liquidity, okay? It's important always to know where the liquidity is, okay? In this case, this POI, it's a weak POI. This one is the strongest one, okay? The most attractive one for you to then perhaps be looking for a sell position, all right? If you want to take a position on a sell right here, it's very risky because there is no liquidity, okay? The liquidity is actually sitting above that high. And maybe the market, what it's going to do is potentially, eventually just come up, stop you out, maybe mitigating the actual POI or order block at the top before actually dropping, okay? So this would be pretty much a fake order block, all right? So it's always important to understand which setup is the best. This move, just one clean move like that, it's very risky. You always want to see liquidity, okay? The market to create, if it's getting lower, to create a little lower high right here, a minor correction, right, and a drop, right, breaking that. That's a good setup, okay? But you're not going to be taking this one. Now, I'm not saying that it's going to happen all the time, but probabilities say that the market needs to take liquidity in order to move. Liquidity is fuel, basically, right, for the market. So it can still react. Yes, to that, I'm not going to lie, the market can still react, but more often than not, you're going to see the market actually sweeping those highs, taking liquidity, mitigating the one at the top before actually going to the downside, okay? You can do a lot of things to let's say, refine your entries, you know, go in a lower time frame, your spot, and maybe a boss and a change of character. I have also explained that on my previous videos if you want to check them out. At the moment, let me go ahead and show you some examples based on this. Right here we can see that the market did this move from the top right here. We see a clean move, correction, clean move, right? So what happened in there? The market created this actual, you can mark actually this one as the POI, like this one right there. You see why this was a weak POI? The market actually went to the top to sweep, right? So this POI right here it's a weak POI. Why? Because again, look at the move. Look at how strong the move was right here. There is no liquidity form. The liquidity is actually, you know, above this corner right there. So what the market did is, you see that the market actually, after this first move, correction, second move right there, the market went up, sweeping this highs, taking that liquidity, right? Taking that. If you had a position right here on a sale, most likely you're going to be stopped out. The market is going up to mitigate the one at the top before actually going to the downside, okay? So it's a little manipulation in there. You see why it happens. Sometimes just barely right here, an actual clean move happened, but you see that this was very aggressive right here after the break, right after this boss. Market created this break of the structure right here, right? What the market did, nice, clean, aggressive, right? Yes, we did have some imbalance here, also some imbalance here, and the market went up almost immediately, pushing up. So you see that even though you had a clean break right here, clean move, the market went up to the only zone that was formed in there, because the one on the top was already mitigated, right? This one was mitigated already, but from here the market had a very strong drop, right? Not necessarily means that it's not always going to be like playing out, or maybe just stopping this order block right here at the top. No, it can still react in this case because it's the only origin, basically. It's our order block right there. There's no POI at the moment. This is a clean order block at this point. Okay, let me show you another example. See, on a scenario like this, when we have an aggressive sale, right, minor correction or indecision here, and then another aggressive sale, people will mark this. There's nothing wrong to it, like marking this zone here as the POI right there, and also this zone at the top as your order block, right? There's nothing wrong to that. Okay, it's just that you know that when there is a drop like that, that aggressive, okay, just marking this POI. Normally this POI, it's a low probability zone, right? Because of how aggressive the move was, okay? So look at that. Normally the market will actually try to take the liquidity, which is sitting above that POI, okay? Sitting above the zone, that's where the liquidity is, okay? Before maybe the market go into whatever direction it wants to take, right? In this case, if it was to the downside or to the upside, ended up actually dropping after even coming back to the zone it came, basically. So you see that, you know, this type of POIs are not that good. It's about probabilities. You normally want to see, if the market is dropping like that, what you want to see is the market create the liquidity. Let's say it's dropping aggressively here, then it did something like that, aggressive move. Okay, so this POI on top is the one that is attractive because you know that it may, boom, may sweep this highs, mitigating the zone before continuation to the downside. Okay, it's about probabilities again, not because I'm telling you this, it means that this POI right here, this zone, is no longer valid. You can still take positions in there. Markets can still react to that zone and never even mitigate, or I'm sorry, liquidate these highs. The market can still literally go do this, right? Eventually at some point it start losing its strength right there, and then sellers will get in control, okay? So it's not that this POI is not going to work all the time, no. Or it is going to have a reaction every single time, no. Probabilities say that the markets need to take liquidity. So if you don't see, all you see, it's a clean drop, have in your mind that you need to see liquidity. You need to see where the market at least is creating at least some sort of consolidation. Another thing that you can see to make that POI maybe a bit more attractive is, let's say the market is going this way like that. Say this is the actual drop, right? You have a very big drop. Then all of a sudden the market will start doing this, right? It's like a minor consolidation like that. You know that's actually good. This POI, it's becoming more, it's high probability now. It's getting, sorry for my English. It's getting a lot better now at this point for it is getting more and more attractive as a POI because now you have liquidity. The market has built liquidity in that zone, right? And because now you're seeing that liquidity, once you start seeing that liquidity, that's when you can actually look to place your sell position, okay? Not right away, okay? Because when you're not seeing Like literally, when you see this aggressive sell, there is already a lot of traders placing their sell positions right away. And that is risky. It's very aggressive. Okay? So normally what I recommend is to wait a little bit more to see if the market will actually build liquidity. If it's not building liquidity, if the market is just literally pushing back up almost immediately, touching that POI, then be careful, because there's a very strong probabilities that the market will try to look to sweep those highs, maybe mitigating an order block that is on top. Okay, so it will do a sweep before actually dropping. Okay, so understand the probabilities. It's always important, guys, to see the liquidity, to spot the liquidity. If you don't see the liquidity, as simple as that, you're going to be the liquidity. All right, so I hope you guys understand with these couple examples. Let me look through for one last example so you can understand a little bit better. Okay, and in here on this example, we can see the market is failing to create a new low right there. Let me just delete this. So it's just failing to create a new low, right? So price creates like some sort of double bottom and pushes up very strong, creating a bounce right here. We do have a break of the structure at that point. Right, after that break of the structure, let's see so far what is doing. Look at that, the market actually moves up very strong, right? Very aggressive move, minor correction, aggressive move. So far this is what we have, okay? At the moment, we have a POI, okay? Which in this case, it would be here. You can mark, here it will depend. You can mark this, or you can mark the entire bottom. This candle, and also including this week. It's up to you. Sometimes, depending if you're doing some sort of refinement, you can actually cover this week as the POI. Okay, it's up to you. But we do have a couple of videos explaining that, so you want to check it out on the actual playlist that I have here above, so you can learn from that. Okay, and another zone would be perhaps right here at the bottom. Okay, this is the origin. So we have the POI, and we have the origin. Okay. So far, what we see, it's very aggressive move to the upside. It doesn't make sense for us to be looking to place a position here on a buy, right? On a buy limit order. Why? Because there's no liquidity yet. You don't see liquidity yet, right? You don't see any, and the market actually creating liquidity. All right. So we have our POI, all right? POI right here, and our order block at the bottom. So far what we understand is that below that zone is liquidity. That's what we clearly see so far, that our liquidity at the moment is standing below that low. Okay, so my job is to simply wait and see what's going to happen. Look at that. So market, the next two candles, they just come directly to sweep this liquidity up. Boom. And it starts actually mitigating the zone. You can place the stop loss a few pips below. Take profit maybe at that high. Okay, but you see what the market is doing. The market is now sweeping the liquidity, just took the liquidity, all right, from that POI zone, all right, which, as I mentioned, not all the time the market necessarily has to take that liquidity. Sometimes the market will react to that POI. It will definitely react, and there's no way to know exactly when it is going to react and when it's not. We don't know. We don't move the markets. We just simply take the risk and live with the results. If you want to actually place already your buy limit order right there, right here, and your stop loss right there, you want to make two positions, because there are a lot of traders, smart money traders, they place already two positions. When they see that this one move, correction, another move, right, immediately they place a buy limit order right here and a buy limit order right here, and they just simply wait. Okay, so here this would be a 1 to 3 risk to reward, and this one would be a 1 to 4 risk to reward. So in this case, basically with these examples, guys, I'm just showing you that everything is possible. You can still do both ways, and it's up to you, but probabilities are that this actually works better. So thanks again, guys, for watching. Subscribe for more. If you're new on the channel, there's a lot of more content coming like this, especially on smart money concepts. So I'll see you guys in the next one. Take it easy, guys.